this video, I just want to share with you guys a basic understanding about market structure. Just something you need to understand about the market so that you can actually develop a working strategy that's going to get you profitable. And before we actually dive into this video, I just want you to know that you learning a particular strategy is not gonna guarantee that you're gonna win every single trade you take with that strategy. The reason why we take or learn a particular strategy is so that we can have a bullish equity trend. Okay, what do I mean by a bullish equity trend? You want to always make sure that even if you are losing during your tradings, because you are doing the right thing, sticking to one particular strategy and managing your risk, are you following me? It's going to keep you moving upward. When you have a good strategy, you have a good risk strategy. Like for example, look at this trade. This trade is a 3-hour trade. Now this 3-hour trade means that if I'm risking $10 here, I'm going to be making $30 here. So when you have this kind of system that helps you, win 3 times whatever you're risking, it helps you stay above, in the sense that if you make one win, you need 3 losses to lose that one win you made. So when you have that kind of system and you keep trading, you can have like 10 trades and 7 losses in a row, giving you just, if it's $10, you're losing only $70. And when you win 3, each win is about $30 in profit. So when you have 3 wins, that's about 30 times 3, that's like $90 in profit. 7 losses is $70. 3 wins is $90. 90 minus 70 is $20 in profit. So you see, even if you are losing, you are also staying afloat. So that's why we learn a strategy. But you see, most people don't know this. Now, this basic understanding I want to share with you guys here is something that's going to help you in your trading. It's going to help you understand what you need to know. But another thing is that don't fall into that trap of chasing it. Don't fall into that trap of always wanting to make sure you see the strategy every single time, because it's easy to identify. You want to see it every single minute so you can make money quickly. That kind of character also is going to kill your trading and stop you from getting profitable. Okay, I've used 2 minutes to talk about, to go about the psychological aspect. So let's dive into what I want to show you today. Now, look at this market, this chart you are seeing here. If you are new to trading, okay, let me see if I can get my Canva working. If you're new to trading, okay, just a minute, guys. All right, let's go. If you're new to trading, there's what we call a break of structure. Now, what is the break of structure? It's very, very easy. Okay, if you're new to trading, you should have known about Bitcoin. You should have known when Bitcoin was about 60k dollars, when you went to $60,000, and now it's about 170 something, $117, I think. So now you see, when Bitcoin was at 60 something dollars, which, let's say this was something dollars, and now this is $117. What happened was that market moved from this point and came down and moved to this point. The point where the market broke that 60,000 or 16, I don't know, 69,000, I don't know. That point where market broke that $60,000 is called the break of structure. BOS. B for break, O for off, and S for structure. Okay, so that's what we call a break of structure. Now, with that being said, market moves up, comes down, and moves up. This is the complete cycle of an uptrend. It must come down, then move up. You see, most people try to panic when the market is coming down, and then they try to sell most of their coins thinking that the market wants to dump. No, the market is just doing what we call a retracement. I'll help to break down this. It's called what? A retracement. Let me see if this retracements. Retracement means when you, let's say you expand a rubber band. When you expand it, it has to come back to the normal way it was. The elasticity of the rubber band makes it comes back to the normal size it was. So that's the retracement after expanding. So when there's an expansion, you're going to also wait for a retracement before another expansion again. So we call this an expansion or an impulse. An impulse move. Impulse. Okay, so we call it an expansion or we call it an impulse move. Okay, and these two things have to happen in order for the trend to keep going up. So before we go here, I was trying to explain to you what a break of structure is. So when the market makes an expansion and then retraces, okay, and tries to make an expansion, in order to stay on an uptrend, it has to make an expansion or make an impulse move that should have a higher high, because it is a high. That's why we say ATH, all time high. It is a high. Okay, so the market is going to make a higher high, and that higher high causes what we call a break of structure. All right, we have heard about different kind of concepts, okay, from different mentors, but everything is still telling you the same thing. Now let me tell you something. Before a BOS happens, okay, there is gonna be, a kind of struggle just before the BOS happens. For example, let me use this one to explain to you. If you are blocking the door and somebody wants to leave the door and you are blocking the door, are you following me? The person has to struggle with you before getting out of that place. So let's say the person is in your house and you go in and block the door and you're like, oh, this person, you're not going to leave this house today, and you're blocking the door, and that person struggles with you. When he struggles with you and he wins you and leaves that place, at the back of that person's mind, he knows that anytime he enters that house, you're no longer the problem. So he can easily leave. Okay? So before a break of structure, or when there's a break of structure, let me tell you what happens. It means that there was an invisible structure around here that should have made this market that went up to actually come down. So, but because of the momentum of the impulse move or the expansion, are you following me? The market broke that structure, pushing markets higher. You see, trading is not as hard as you think. You just have to listen, understand the logic, and work with it. So once market breaks that structure, there's going to be like a struggle before that market breaks structure, and then it is those areas where market struggles that we are looking to take trade from. Now let's look at this. Now before market is going to break this structure, it's going to, let's say, have like a consolidation, or just going to, or just going to come down, trying to, move down before doing what? Moving up, before breaking up. Okay, so it is this area where there's a struggle that becomes the area where we are expecting market to retrace back to, so we can take a profitable trade from there. Okay, whether it's going to be a 3-hour trade or a 2-hour trade. So when market comes back to this level, okay, we want to take our trade. When market comes back to this level, we want to take our trade and we want to move up. So this is just what we want to look for in the market. It doesn't work every single time, but one beautiful thing about it is that when it doesn't work, you're just going to lose 1 hour. But when it works, you're going to make at least 2-3 hours, and it's a profitable way. Now let's continue. Now when it doesn't work, it means that this structure level that was broken, before I even jump to that place, the structure level on the uptrend that is usually broken is known as the resistance level. We call it the resistance level. Okay, it's known as resistance level. So any form of demand that broke this resistance level that was around here, that we want to wait for market to come back to continue, I follow him. Any form of demand that broke that uh, resistance level is an area we are waiting for market to come back to. I normally call that area an optimal trading zone. It's an area you're expecting market to come back to. So when market comes back to that area, we want to push it up. But what happens when that particular area becomes invalid? When that particular area becomes invalid, it it means that this that happened became a most different kind of trading styles have names for it. Some people call it sweep of liquidity, a liquidity sweep, liquidity sweep. Some people call it a breakout, a false breakout. Some people call it a fake out. Some people call it a swing failure pattern. Some people have names for it. Okay, but when that happens and it comes down without actually, without respecting this demand level that is here, instead it comes and breaks this demand level. Usually there's going to be a supply level around here before this demand level is broken, and the market goes back to that supply level and dumps. And you can get your 3R or your 2R. Are you following me? This is just basic knowledge you just need to understand so you can develop a strategy around it. Okay. Now, why most traders fail is that they've consumed so many knowledge, and there's some people that tell you demand level should be at the extreme bottom around here. Some people that tell you that you should use fair value gap. Some people have told you should use breakout, but then you're like, okay, what am I going to use? I've learned about fair value gap. I've learned about demand level. I've learned about what am I going to use? See, those kind of reasons. That is one of the major reasons why you're actually failing, because most of these people teaching you have not understood what trading really is. They have only consumed the knowledge, but they don't have an experience that can prove that they are really traders. So they tell you so many things because they think it's by the knowledge that you become profitable. No, it's by practicing one thing from that knowledge you've gathered that makes you profitable. So if fair value gap actually is what works for you, good and fine. If it's breakout blocks that works for you, good and fine. If it's other blocks that work for you, good and fine. You just need to find one of the easiest that works for you and you stick with it. If you consume so much knowledge, it's going to hinder you from making progress as a trader, and that is why most traders are stuck. One of the major reasons why most traders are stuck. What I just gave you here is a very, very simple trading strategy. In fact, this was one of the first strategies I learned, and I wished I never learned any other thing, because one thing that affected me when I first learned this strategy was that I used to lose sometimes, and I didn't want to lose at all. So I went in to go and learn gather so many knowledge, and when I came to the charts, I saw all the whole knowledge I've gathered staring at my face anytime I want to take a trade. I didn't know the ones to use. Are you following me? So what I just do is that I just try to see if all of them are around each other, and I'll just use all of them to take my trade. My stop loss is not big. But when you understand that it's about using one thing to take a trade, it becomes easier for you. Okay, it becomes very easy for you. Very, very easy. Now, sometimes, let's go to the chart. I took a trade. I did not just take the trade. I went up the trade on my signal group. We lost it. This month, July, this year plus 1.9 R. That's nice. Now let's go to Ethereum. Now Ethereum, I took a trade. We lost the trade, but you see this one actually went up as planned. But let's see how my trade has been going so far. I had this here, A3R. I had this here, 1.65R. This signal trading, signal group. I have this here, minus 1R. Let's go. Let's go. I have this here. I have this here, 3R. You see, one of the reasons why I'm taking all these trades is because just before the breakup structure, there is a retracement, a little struggle, which is indicated by this candle there, and I just mark it and I, take my trade. I have another extra confidence that makes me take that trade, not just because there was a struggle. It's also this you're seeing here, but not for this class. Okay, let's see if I had another trade around here. Let's see. Okay, I don't have any other one again. Okay, now that trade's down here. All right, but that's what it. So now let's go to the chart. Now you can see, as I told you, I had I can see it's 5 minutes I'm using. I'm not even using much. I'm not using much. I'm just using 5 minutes to take my trades. Now let's go. Now I took this trade here with my fans. My group. We did 1.9, 1.6 hour. I mean, 1.6 hour. I was targeting 3 hour, but broke even and 1.6 hour. I just took very very little profit for the break even accord. And you can see why I took this trade. BOS, and this was the struggle. This was a struggle before this BOS, and when it pumped, wait for market to retrace, and I sold. Now, when this market eventually took out this supply level that is here, took out the supply level here, okay. Market took that supply level there. All you just have to do is look for the last block before the supply level was taken out, and this is the last struggle. I call it the struggle. It's just like I told you, you try to block the door, and finally we took it. You can see it. Boom. We talked about 3 hour. Now you can see I'm expecting a trade around here. Let's see if market has come to that place. Doesn't. It should be around a nice 3 hour. Let's target a good 3 hour on here. I'm expecting this trade to give me at least 3 hour around here. Alright, so let's go. So as I was saying, you just have to identify your break of structure and the block that caused the break of structure. Here's the BOS here, and I'm wanting to use this block to take my trade. You see, and you don't need to actually chase the market. You just have to wait. It's very very easy. You just have to wait. When you wait, it makes the trading thing easy to actually, make a profit. You see, what makes most traders fail is just the fact that they actually want to take so many trades and make so much money at once. But when you actually reduce the amount of trades you are taking, it actually helps you to take very good quality trades and make profit out of it. Are you following me? So that's just it. So the thing there is, you just have to want to identify the BOS, and then you take your trade. Now, as I told you, when your break of structure doesn't work, so let's look at this area. We have this BOS here, and I have this block. This is the last block here. Now, I took this block to take my trade. When it doesn't work, what happens? When the block doesn't work, there's going to be a struggle before that block is going to be taken out, and the struggle is represented with this black candle you are seeing here. That's going to be the demand that took out that supply. So when market takes it out, you just have to wait for market to come back to that supply zone, and you take your trade from there, as easy as that. Now, some of you that have high respected mentors will look at my chart and be like, yeah, my other block doesn't have this and this before I used it. My demand level doesn't have this and this before I used it. You see, one thing about me is that I don't listen without studying. I have to go back and study if what they told me is what actually works. Most people just learn what they were taught without going to check for themselves if this particular thing they taught is actually what works. Okay, so that's why you wait for necessary extra confluences. Meanwhile, the setup is going and leaving you. Are you following me? So if this looks like something that is very very interesting that you want to learn, are you following me? What you just have to do is go back to the video, rewatch it, go back to your trading view, look at it if it works. If it works and it sounds so easy for you that you can easily stick to it, because the only way to make money from the market is by finding a very easy strategy to trade. It must not be complex. If it's extra easy to identify it and trade it, that's the first step to becoming profitable, because it comes with consistency. Okay, so when you see it's easy and you can be consistent with it, you can pick it up, manage your risks, and start trading. You can even buy a prop and start trading it. I see how it goes. Okay, so let's continue. So here it gave me about 3 hours. Alright, so now let's look at this area. In this area, market broke here. Now there's a little struggle that was around here. This is the last block before the break of structure, and then market retraced back into that zone and pushed up. It has tapped into my level. I'm expecting a sell around here. Expecting a sell around here. A nice sell. Let me send it to the group chat. Send it to the group chat. Alright, so saving the charts, save it. Just expecting 3 hours, and that's all. So if it's an easy strategy for you to trade, you just pick it up and start using it, and don't be scared of losing. The strategy is going to make you lose. That's what you understand. It's going to definitely make you lose. Okay, but keep executing and losing consistently. Like have a constant amount of money you are willing to lose anytime you lose the trade. So let's say you want to lose $50 per trade. Make sure it's $50 you keep losing every single time, and at least target 2 to 3 hours when you're in profit. It's very easy like that to be consistent with that kind of amount. But when you start by losing $100, the next trade you're losing $200, you will not have the energy to take the next trade. And let's say the next trade you now reach $20 and you won, you now make like $60. You now start counting how much it's gonna make to come up from your loss. But if your losses are consistent over time, you easily come out from it. So if this video was helpful, you know what you're gonna do. Just subscribe to my YouTube channel. I'm gonna be dropping powerful videos that are gonna make you understand what we are doing in the market. Subscribe to my YouTube channel. I have a Telegram community where I drop signals. You can just hit interested in the comment section. I'm going to send you a DM immediately. Thank you so much for staying tuned, and see you next time.